Hey, good morning, everybody. Hey, welcome to Thursday. It is Jobs Day, Inflation Day. Got a lot of stuff to talk about this morning. Before we do that, though, let's not forget that there's a lot of things in this world that you and we cannot control. However, you can control the amount of risk you have in your current portfolio. You just need to know what that risk is. More importantly, you need to know where that risk should be for your circumstances. And that's exactly why I developed the Core Retirement Design to help you design the retirement you always dreamed of. Give us a call, 863-382-0037.
Morning, Dave here on your Thursday morning. It's that time of the morning where we head out and check in with our very good friend Phillip Statler from Statler Financial Services and get an update on what's going on with our markets. Hey, Phillip, how are you this morning?
Hey, I'm doing good, Doug. It's glad to get to talk to you for a little bit. It's been a little while.
I get to talk to you before you go on vacation.
That's right. Get a little time away and a little downtime coming up here the next few weeks. So, hey, but with that, yesterday we kind of had a down day yesterday. It was, the market kind of shed some stuff here. The S&P 500 was down almost $32. That was 0.7%. The Dow 30 was down a little over 0.5%, $191, and the NASDAQ, big loser for the day, down $162, almost 1.2%. So some moves down. But today we've got some government data that's come out, and let's start with the less exciting news, and that's job claims. Initial jobless claims were at 248,000. That was up from the 227 last month, and that's more than was expected by the economist and the analyst out there at 231,000. So I know that doesn't sound like good news, but from a Federal Reserve standpoint, that's good news because they want to see unemployment tick up and not down. So some good news there. The other big number that came out, Doug, was the Consumer Price Index. The CPI was up 0.2%. Both the whole Consumer Price Index and the core CPI both up 0.2%, which was basically kind of in line with what was expected. However, we look at the year-over-year numbers; they actually came in better than expected, up from where they were last month. The CPI year-over-year last reading was at 3%. The expectation was 3.3. We only increased the CPI, Consumer Price Index, by 3.2%. So a little better than expected, meaning inflation, that inflationary number seems to be slowing down just a little bit. If we look at the core CPI, it was 4.8 last reading. Let's see, I didn't write that one down. Let me see if I can find out real quick here. But it was it was down to 4.7% this time. So that was kind of as expected, but it's down from where it was before. So those numbers are good numbers in terms of what the Federal Reserve should be looking at. Obviously, that's not the one they hang their hat on, but still gives us some indication. And when those numbers came out originally at 8:30, we saw a pretty good sized bump in the futures. However, in the last 5 to 10 minutes, we're seeing those numbers start to come back down again. Still in the green, but not as much as they were. As Dave was kind of teasing yesterday, Disney reported after the close yesterday, and they missed on a couple things. One of the areas they're really having a difficult time in is their Disney Plus, their streaming service. Their subscribers actually declined by 7.4% this last quarter. So that was a pretty big drop. And they took a $2.6 billion one-time charge. So it actually dragged the company on an adjusted basis to a quarterly loss for this last quarter. Their highlight was probably their theme parks. Actually have seen a bump up in attendance. And so with all that put together, Disney still managed to eke out a gain. They're up about 1.7% right now, but they are really, they're still close to their 52-week low. They're right now at like $88.93 a share. So compared to their 52-week high at $126 a share. So still, they haven't got back to where they really need to be or want to be. The other entertainment company we had report was Six Flags Entertainment. They second quarter, they missed their estimates. They reported a 25% earnings, and they were expected to earn like 78 cents a share. So a pretty big miss on earnings, a miss on revenue as well. And so that entertainment company is down 2.5%, almost 2.6% this morning. So that's kind of the tale of at least two entertainment companies. We had the likes of Alibaba. That's the China equivalent to Google over there, and they beat on earnings and revenue, and so they are trading up today 3.2%. We had Wynn Resorts reported, the casino company, gambling company. They had a good second quarter too. They beat on top and bottom earnings substantially. They were only expected to make about 59 cents a share. They actually made 91 cents a share. So they had a really good quarter. They're up 2.6% this morning before we get traded. I was trying to see if there's anything else that people are going to recognize. That's really about all I think I have, Doug, on the earnings front. So we are right now, futures are really looking pretty good still. On the right button here. We are up. They're bouncing back up a little bit today. The Dow 30 right now is up 100 points. That's almost 0.3%. The S&P 500 is up $15. That's 1/3%. And the NASDAQ 100 is up 0.6. That's $90. And so good things there. On the other side of the coin, though, we still have silver sliding. It just can't get a foothold there. It's down about 0.1%. Gold's sliding up a little bit, up 0.25% to $1,955 an ounce. Crude oil down 0.6, but I'm thinking that's still about where it was yesterday, maybe even a little higher than where it was yesterday at $83.88 a barrel. Which is not good news for me, Doug, because I'm getting ready to travel about 6,000 miles. So I'm not looking forward to my stops at the gas station.
Yeah, I did notice this morning, though, on my gas buddy that some of the prices in our area here had dropped a couple of cents or two.
They have, but that's because oil prices had trended down last week a little bit, but now they trended back up. I mean, I expect them to head back up here shortly before everything else starts happening. In Asia, it's kind of most everything's green. The Hang Seng's up. Well, that's basically flat, up $2 right now. The Nikkei is up about 0.8. So the Shanghai is up about 1/3%. And over in Europe right now, we've got everything is up positive. The biggest winner probably is the FTSE right now, up about 0.9%. So everything looks like it's pretty much in the green today before we get going. So that's my report for the day. Let's not forget, folks, that in this world we live in, there are so many things that we cannot control. However, you can control how much risk you have in your portfolio. You need to know what that risk is. And more importantly, you need to know how much risk you should have in your portfolio based on your circumstances. And that's why I developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
All right, Phillip. Well, thank you for the update, and I hope you have an excellent vacation.
All right, man. Good talking to you.
Enjoy yourself.
Until the next time.
All right. Well, have a good rest of the day and enjoy the vacation. And I guess Dave will be back on Monday to update things while you're gone, and we
And
will
you
talk
get to
to you
do it
when
all
we
by
talk
yourself
to
tomorrow, huh?
you. Yeah, that's going to be interesting. Dave was supposed to leave me some notes to do things, so we'll see how that goes tomorrow.
All right, man. Y'all have a good one.
All right, Phillip. That's Phillip Statler from Statler Financial Services right here on Light FM.
Hey, folks, again, I want to thank you for joining us today. Like I said, we'll be out for a little while, but hey, listen to Light 107.5, 105.7 with Dave, and he'll keep you updated on what's happening in the markets. And until I get back, have a great day. Bye now.